Let's turn now to China because it has become the first major economy to rebound from the global recession. Second quarter GDP growth sailed in above estimates at 7.9%. Bloomberg's Zeb Ecker joins us now live from Hong Kong with more on those numbers. Zeb?
Hey, good morning, Scarlett. Well, you can thank China's $500 billion stimulus package for this GDP rebound. China's GDP growing faster than economists estimated in the second quarter. And as you said, growth clocking in at 7.9% in the world's third largest economy. That snaps back from its lowest growth in a decade during the first 3 months of the year. Now, record lending and a surge in investment helped tip the scales away from a slump in exports. Beijing also relaxing lending restrictions and pumping billions into infrastructure projects. But a key question is whether the growth is sustainable, especially in the face of weak exports.
If export demand is still weak, rests upon what happens in other parts of China's domestic demand. And the good news is that a very important part, housing construction, has started to rebound. So we do believe the kind of growth we're seeing at 8% or so can be sustained.
And today's GDP report in China was good news for stocks across the Asia-Pac. First to Sydney, where Australian shares surged 1.8% to close at a one-month high. Commodity producers, the big gainers. We also saw the Nikkei up today, as well as the Hang Seng here in Hong Kong. Shares on the mainland closing slightly lower after some late-day profit-taking. And Scarlett, the government in China today quick to point out recovery on the mainland still lacks a firm foundation. So we'll be watching these numbers going forward. Back to you now.
Some words of caution there. Thanks very much, Zeb.